Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you. And before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Today's webinar is centered on the trading game. I call it a game because I really do believe that's what it is. For the first 4 days of this week, Monday through Thursday, we'll be talking about the trading game and the rules of the trading game, or the myths and beliefs that we have about the trading game. But I don't want to really make this just a webinar series about trading and focus so heavily on trading that we forget what the big picture is. That we're not just here as traders, but we're also here as people, and personal development is as important, or perhaps more important, than just trading. This morning I want to set the stage for what we're trying to accomplish and introduce you to the personal watch list. You should have received an email recently describing this personal watch list to you, and I look forward to working together with you on a watch list that looks a little bit different than what we're used to using. I want to preface everything by telling you that I believe that trading and most other things in life are a game, and that the game is based on probabilities and not sure things. I believe that very few things in life are knowable with certainty. And what we do believe with certainty isn't necessarily the truth, but what we do believe with certainty has a massive effect on what we do in life and how we act around to the people around us, and how we treat trading, and how we treat relationships, and everything else. Of course, we're centered on trading because that's what we're all here to do together, and I'm certainly not a personal development coach from any stretch of the imagination. But I do believe in some principles related to the game of trading, or the game of life. And I want to share those principles with you over a 4-day period of time. And I want to emphasize probably 10,000 times that I don't believe that trading is knowable. I don't believe that you can understand something about the markets with certainty. I don't believe in the efficient market hypothesis. I don't believe in the random walk theory. I don't believe that all good traders are lucky. I don't believe all of those statements. But I do believe that most things in life, or the game of life, or the game of trading, are best reduced to a series of probabilities. And those probabilities themselves are unknowable for sure, and those probabilities for sure are not necessarily accurate. It's why we say past performance is not necessarily indicative of future results. If you were never able to accomplish something that you'd never been able to do before, then nothing would ever be worth trying again for a second time. Yet here you are as a trader, and most of you are trying this for the second, third, or fourth time. There's only one goal that we have when working together, and that's the consistent application of a profitable trading method that we do together. There's only one reason that I'm still here and that you're still here. It's that you're not exactly where you want to be with respect to trading, and as soon as you get there, I expect that you probably won't talk to us as much as you do right now, and that's perfectly fine. I wouldn't mind that at all. It wouldn't be a problem. We could meet once a year in Las Vegas and have a great time. During the course of the week, and especially starting tomorrow, after we've set the stage today, I want to talk about specific application of principles that apply to the trading game. But these principles also apply to the game of life. And without further introduction, I want to share with you just 4 core concepts. Trading in life is a game, and the rules are really screwed up. And you can try to change the rules of this game, or you can just get a new game altogether. You can opt out of the game completely that everybody else is playing. We'll talk about what that means in a moment, but I want to remind you again, and I want to state unequivocally, trading and life is just a game. It's simply nothing greater than that. It's just a game. It's not life or death, and it can be reduced to probabilities. Those probabilities are not certain probabilities. They're just the best estimate of what is going to happen. I believe that success in life depends on your ability to estimate what's going to happen next. And estimation is always an unknowable and uncertain endeavor. You can never be an expert estimator, and you can never be perfect. We're not talking about being perfect or getting a sure thing. We're never talking about that at all. What we're talking about are probabilities, and the best you can ever come up with in the game of life or the game of trading is a set of probabilities. The problem with getting to a set of probabilities, even if you start playing a new game and you play that game according to probabilities rather than certainties, even when you get those probabilities, we come across weaknesses that we have in our own behaviors, weaknesses that we have in our own emotions, psychological deficiencies and addictions, and other obstacles that prevent us from even taking advantage of those probabilities. Remember that you could have a trading system that has a 95% win rate and winners that are 2 times bigger than the losers. And you can find hundreds of people that can screw that up. And the reason that they can screw that up is that they don't show up for it. They don't trade it successfully because they have emotional or stability problems. They move their stop loss, they move their profit target, or any other number of things that make it so that even with a giant probability of success, they still don't perform very well. If any of you have ever had a teenage boy, for example, you know that you can give an enormous amount of resources to a teenage boy, and he is still going to find a way to screw it up occasionally. You can give somebody a perfect job. You can give somebody a perfect partner. You can give somebody a perfect computer. You can give somebody perfect anything, and people will always find a way to screw it up. It's the same with trading. You can find a profitable trading system with a high probability of success, and you can still screw it up. And the ways that you screw it up are by influencing or changing the probabilities by incorporating your own nasty, counterproductive behavior. Well, I want to talk about the origins of nasty and counterproductive behavior that ends up screwing up what we do. Here are some rules of the trading game that some people believe. Some people believe that you're supposed to do what you're taught to do. So they believe that you're supposed to implement whatever you're taught. So you join a webinar series like the Rob Booker Pivoteers group, and you're just supposed to do what Rob tells you to do. You're supposed to learn what you're taught. Your mom tells you to do something, you do it. Your teacher tells you to do something, you do it. Your boss tells you to do something, you do it. That we're supposed to be rewarded in life by learning what someone else tells us to do and then doing it. That's a rule. That's a rule of trading. Trading as a game has this as a primary rule. You're supposed to learn how to do it from someone else, and then you're supposed to implement what you're supposed to do. And that's supposed to work. You're supposed to take information from someone else's brain, and then you're supposed to implement it, and that's supposed to work. You're supposed to be able to somehow transfer the knowledge from someone else's head and implement it. That's a rule of the game of trading. That's a traditional rule in the current game of trading. Every single trader who enters the game of trading follows this rule. I'm not saying this rule is appropriate. I'm saying that this is what people believe. This is actually what people believe. Another rule of the game of trading that you enter is that you can figure out the market. You can already see that I don't agree with the statement. You can see because I put the words figure out in quotation marks. I don't believe that. I don't believe that at all. I don't believe you can figure out the market. Here are ways that people say that they can figure out the market. You go to Forex Factory right now and search in the threads for the words probability. And someone will announce to you on Forex Factory that they have a probability of success of X. Or someone will say, look at this chart. It always happens like this. You can see, I think they're called superlatives, right? The use of superlatives in trading is inappropriate. Inappropriate. I spelled it wrong, but you get the idea. If you say always or never with respect to trading or with respect to life, you're generally going to be wrong. You can't figure out the market. Even if you get a trading system with a probability of success historically, you cannot have any guarantee that that trading methodology is going to work into the future. There's no guarantee. You're never going to be able to figure out the market. It's not going to work. And if you use words like this always happens, you are destined for failure. It's never going to work. However, The entire education industry with respect to trading is based on the idea that I can help you figure out the market. That the market is something that you can figure out, and that once you figure it out, you're going to be successful. The market is not able to be figured out. You can't figure out the market. Another rule of the game of trading in the world today is that having answers is better than having questions. Everybody wants answers. They want an answer about where the euro is going to go. They want an answer about what happens when one moving average crosses another. They want an answer about what sure thing is going to occur after a pivot is missed. And so there is enormous value placed on having answers. People will attach themselves to confident individuals. I'm a confident individual, so a lot of people in the world of trading attach themselves to me. That's just a true statement. I don't think it's great. It hasn't benefited me enormously. And when people start to depend on me, they're doing it because they think that I have answers. And so having an answer is always better than having questions. No one signs up for a trading course that promises to give you a lot of questions. That's ridiculous, right? No one would pay $1,000 to join a trading course that leaves you with a bunch of questions. You join a trading course because you want to get answers. However, this places the priority on getting answers rather than having questions. I think that if you understand that the game of trading is an unknowable and uncertain endeavor that rewards estimation and the application of systems based on probabilities, you realize that there is no right answer that always works. And so valuing answers is a complete misallocation of your effort. You cannot have the answers about how the market is going to work, and we can come up with the greatest statistics in the world based on the most gigantic sample set in all of planet Earth, and we can still be wrong if Greece defaults on its debt, and then Portugal follows, and then suddenly we find out that France is bankrupt too. It won't matter. The answers that we got from even probabilities were not sure things. Think about it for a moment. You can have a trading system that supposedly works 75% of the time historically, and then you can actually go down the path of saying that that 75% probability of success is 100% true. But that's not actually the case. And we don't realize how dangerous it is to value only answers rather than questions. We also believe in the world of trading that mistakes are bad. We read in the paper about hedge funds blowing up. We read in the paper about investment banks going down. We read about traders who margin call. And we find that mistakes are, killer mistakes are bad, that you want to avoid mistakes at all costs. Well, the problem with that is, once again, is that you can't avoid mistakes, and so you're automatically setting yourself up for failure if you penalize yourself for making mistakes. You're automatically going to fail if you penalize yourself for mistakes. The reason that Goldman Sachs is still around is that when they made a mistake, they went and got bailed out, and they kept going. And they made a mistake, but you wouldn't know it, right? You don't focus on that. Lehman Brothers made a mistake, and that was it. They blew up completely. It's not whether or not an investment bank is going to make a mistake. It's about what that investment bank or what that individual trader does when those mistakes are made. You cannot avoid mistakes. It's impossible. Even with a trading system with the probability of success that is run by a computer, mistakes will happen. The computer will go down, the system will break down, the market will change, the individual will forget to turn on the computer, whatever. Mistakes are impossible to avoid, but we believe that mistakes are bad, and when a mistake happens, we tend to shut down. We tend to turn off, we tend to give up, and we tend to say, well, that's impossible. Unless I can avoid mistakes, I don't want to trade anymore. And people say that kind of stuff all the time. We also believe that weaknesses are embarrassing. You don't go to an expo and hear a presentation from somebody about the worst trades they ever took. No one wants to talk about their weaknesses. Weaknesses are embarrassing. This is true for the game of life, and this is true for the game of trading. Weaknesses are embarrassing, and entire industries have been set up to help you avoid the discovery of other people's weaknesses. Nobody wants you to know what their weaknesses are. Everybody wants to hide their weaknesses. Now, these four of these principles that I just discussed came from Ray Dalio's Principles. It's a document written by the CEO and founder of Bridgewater Capital, which is one of the largest and most successful hedge funds in the world. Probabilities tell us, and history tells us, that Ray Dalio probably isn't going to be massively successful forever. But he's been successful so far, and he's beaten the odds, and so he's worth listening to. And four of these game of trading principles have come from Ray Dalio's writing. Another principle or belief held in the game of trading and in the game of life is that pain is a negative, that we want to avoid pain as much as possible. We want to do whatever we can to avoid pain. We want to do things the easy way. The easy way is to find somebody who has the answers and copy them. That's the easy way to do it. The hard way is to find answers on our own, and we want to avoid that. Well, all things in life, trading, relationships, work, all of these have rules. And most of the standard rules of life are the same standard rules of trading. Pain is negative, we want to avoid it. Weakness is embarrassing, so we want to cover up our weaknesses. Mistakes are bad, so we don't want to make mistakes. Having answers is better than having questions, so we don't want to admit to be a doubtful person. I can figure out the market. I can figure out people. I can figure out this job. I can figure out my boss. You are always angry. You're always upset when. Superlatives, never, always, every time. Those kinds of words used in the game of life or the game of relationships is completely unacceptable. And also, we're supposed to do what we're taught to do. We're not supposed to figure things out on our own. That's dangerous, and we're incapable of doing things on our own. And this applies to the game of trading, and it applies to the game of life. Here are some other beliefs held about the market. Brokers always win. The random walk theory is true. You must work at a bank to succeed at trading. The random walk theory states that stocks and other financial instruments take a random walk, that their price action cannot be predicted, that future price action or where the euro or pound dollar is going to go cannot be predicted with accuracy, and there's nothing that you can do about it except invest in an index fund and let the probabilities all play out wherever they do. That's a very fatalistic view of the market, but it's a widely held belief by many in academia and even many within the industry of finance. I'm not here to tell you whether that's true or not. I'm just telling you that this is what people believe. These are closely held beliefs about the game of trading. It's also a closely held belief about life. The boss always wins. I can never really determine whether I'm going to get a promotion or not. There's a random effort. Oh, who knows who's going to get promoted? Or who knows who's going to find somebody to be with for the rest of their life? Or you must be a certain age, or you must look a certain way, or you must be a certain amount of beautiful to find somebody, or you must work at a bank in order to succeed. These are all closely held beliefs that people have in life. And there's no way out of it, right? I mean, these are closely held beliefs about the way that the world works. Trading is the most difficult thing that you will ever do. That's a closely held belief. Most people that engage in trading at one time or another are told to believe this principle. This is what they believe. They believe that trading is the most difficult thing that you're ever going to do in your whole life. And whether or not that's true, it's a closely held belief. Is it true? Is trading the most difficult thing that you're ever going to do? Remember, just a moment ago I said when you use superlatives, when you use the words always, never, or most difficult, that means number one difficult thing you will ever do. Is that really accurate? I mean, if you had lived through a war, would trading really be the most difficult thing that you will ever do? Have you ever been in an argument with your partner, or someone that you love? Is trading really the most difficult thing that you will ever do? But we throw around this phrase here like it's absolutely the truth. And guess what? It's as true as you want it to be. You believe that trading is the most difficult thing that you'll ever do, then that's going to be true. That's going to end up being the case. You're going to make it into the most difficult thing that you've ever done. And we'll talk about why that is in a moment. Everything that you believe is as true as you want it to be. It doesn't matter what you list. If you believe that your partner is always angry when you come home late, then you will come home late and you will absolutely positively act in a way before you walk in the door and after you walk in the door that expects your partner to be late. And please don't fool yourself. Your partner can pick up on the fact that you think they're angry, and the fact that you've already accused them of being angry sets a process in motion that makes that statement as true as you wanted to believe it to be. You can't keep people from being angry or keep the market from going down. You can't do those things. But everything is as easy or as difficult as you want to make it be. Everything. It doesn't matter what you believe. If you believe that Muhammad is the prophet, is God's prophet, and it will become true to you, and you will act in a way and live in a way that makes that true. It doesn't make you a bad or a good person. It doesn't make you unacceptable to me or acceptable to me. But everything that you believe is as true as you want it to be. Remember that everybody is an atheist to everybody else's religion, and every trader is an atheist with respect to somebody else's trading system. And so they say, well, I would never do that trading system because that would never work. And so that trading system's never going to work for them. Or they say that the market and trading is the most difficult thing that you will ever do. Or they say things like, it's never going to be possible to trade for a living unless you work for a bank. All of those statements are as true as you want it to be. Now, if you don't believe that this is actually the case, if you don't believe that things are as true as you want them to be, stick with me for a moment. I want to ask you what you really believe at your core. At the core of your human being, what do you really believe? Talk about that for a moment. Because we act on our beliefs. Number one, we act on our beliefs. Let's say that you believe that Jesus Christ is the Son of God and atoned for the sins of the world. You have actions on a daily basis that are in accordance with those beliefs. It's not the only reason you do actions, but you act on your beliefs. You believe that Jesus Christ is the Savior of mankind, so you pray in the morning. And that act of praying in the morning is dependent on your belief. If you didn't hold that belief, you probably wouldn't be praying, right? Your action is determined by your belief. The second reason that we act is at random or based on our lizard brain. Right? I mean, the innate, instinctual brain. People in most religions believe that there's a natural person fighting against the higher person, and that there's a constant war going on to become more like your best self or whatever and avoid some of that random behavior. Remember, you act based on your beliefs and you act at random. Let me give you another example. Let's say that you are a highly religious individual and you believe that, let's just use an example, drinking is bad. Let's say that you believe that alcohol is inappropriate. And so you act on your beliefs and you propose a ban on alcohol in your own community. Let's say that you also vote against people that would go into office and create laws to make drinking legal. And then let's say that privately you struggle with alcoholism and that you drink, that you're privately an alcoholic. You're acting on two things. One is on your base beliefs. You go out in public and you act a certain way, and then privately you act a certain way because you can't seem to avoid it or change what you do. Traders act on our beliefs. I believe that pivots are reasonable profit targets. So I set up trades that have pivots as profit targets. And then second of all, we act at random based on our lizard brain. Yeah, I knew that pivot was a target, and I knew that I wanted to trade to that pivot based on divergence. But you know what? I'm going to take this crappy trade because I can't avoid it. I can't stop trading. Well, our lizard brain, that central part of our brain that acts on instinct controls our responses to emotional trading. It also controls our response to emotional living. Traders are really crappy sometimes because they're trading with their lizard brain. If you engage the fight or flight mechanism, which says when given a high pressure situation, I either run or I fight, that's a terrible trading strategy because it forces you to make a decision immediately based on instinct. And that's generally not going to be something that you've thought through, and it's generally not going to be something that works. Think of the last time that you fought with somebody that you love. Think of the last time that you took a drink if you're an alcoholic. Think of those types of situations. Those are terrible strategies for living, right? They're based on instinct and what your core like lizard brain wants you to do. Well, it's also true that if you have limiting beliefs or if you have terrible beliefs about the market, like it's the most difficult thing you're ever going to do, you're also going to make terrible trading decisions. And most traders lack the ability to trade from their higher regions of the brain. I guess you could call that the neocortex. It governs language and choice and consequence, whereas the reptilian complex, the amygdala, or whatever it's called, controls the instinctual responses that we have in high pressure situations. And so we engage in a repeated cycle of failure. We leave our trading in the paws of the lizard, and then we get an epic fail in our trading. For instance, we do things like we impatiently take trades that we never planned to take. So you're an impulsive individual. Or we're too patient. We never take trades at all. We don't even take trades that we plan to take or trades that we tested. We test a system, we build a system, and then we end up saying, that's not good enough, I want to tweak it and change it more, and we never get around to actually implementing it because we can't be sure of something. I see this happen all the time with two different types of people. Impulsive people take trades they never planned to take, and then I see another significant issue with people who are systems thinkers or programmers that will never end up taking any trades because they can't get enough of a sure thing. And so they never do anything at all. And that's just not, that's actually both of those are really bad ideas. And I can reduce it down to the impulsivity quotient. Impulsivity affects trade frequency. The higher your impulsivity, or the less patient that you are, it's more likely that you will take all kinds of crazy trades. The more patient that you are, the less trades that you will take down to zero. And this is a common problem, that you either take too many trades because you're impulsive, you don't take enough trades or ever implement a system because you're too patient. And the balance is somewhere in the middle, but once again, how do we get there? Well, the reason we're living on both ends of these spectrums is we have beliefs about the market. The impulsive traders have this belief about the market that it's the hardest thing that they're ever going to do, and they also believe that they're supposed to be trading, they're supposed to be acting, they're supposed to be involved, they're supposed to go out there and hunt and kill, and so they go out there and they do whatever they can. And the people on the other side of this say that trading is the most difficult thing to do that they're ever going to see in their whole lives, and that they can't be successful, and that the odds are stacked against them, and it's never going to work, and so they never take one trade until they can have a sure thing, but no sure thing ever exists. And it's a cycle of failure, and you end up just being a stripped screw. You've been turned and rattled and pushed around and tried everything, and you still can't find any balance, and you're bouncing back and forth between patience and impulsivity, and one week you don't trade, and the next week you got to take a ton of trades, and you're playing in the wrong game. And if you're playing in the wrong game, nothing else matters. Nothing else makes any difference at all. No one cares about your impulsivity or your patience. No one gives a crap. It doesn't matter at all. And it's time to opt out of the whole game. It's time to completely opt out of the entire game of getting involved in this kind of stuff. Move on to the next concept. Here are some principles or rules of a different game of trading. Number one, learn for yourself. Plan your own trades and be responsible and grow up. That's the opposite of learning from someone else and following someone else. Number two, having questions is better than having sure answers. Sure answers don't exist. They don't exist. Even probabilities don't play out the way that the probabilities said they would. Even if something has a 75% chance of success, there's a 50-50 chance that each new trade won't actually have a 75% chance of success. Not even probabilities are sure things. You can't even take a probability and stretch it out into the future and know for sure what is going to happen. You're living on the edge then. The reality is that you can't know what the market is going to do. You have no idea what's going to happen, and you cannot be sure of what the market is going to do. You're never going to have answers. They're never going to exist. You can have probabilities, but those probabilities, even themselves, cannot be sure things. They cannot be. Another rule of a different game of trading is that mistakes are gifts and contain hidden gems. That quote is almost a direct quote from Ray Dalio's Principles, that inside of mistakes that you have made are hidden gems, realizations about things that you didn't know before. Weaknesses are unavoidable and they are universal. You can't avoid them, and you might as well get to work on fixing them, but fix them in the open. No one is immune from mistakes. Everybody makes mistakes. There are no alterations to that. Maybe there is. Maybe there is an alteration to that. Maybe somebody out there doesn't make mistakes. And maybe someone out there doesn't have any weaknesses. But for most people, weaknesses are unavoidable. Especially in the game of trading, weaknesses are unavoidable. Growth requires pain, and pleasure is unknowable without pain. It's okay to have experiences in the market that are not successful, and it's okay to feel pain in the market. Trying to avoid pain in the market is trying to avoid pain growing up. That's just not going to happen. Remember before we talked about saying that having answers is better than having questions. This whole webinar that you're listening to right now seems to propose that I've got some kind of answer for you. And the truth of the matter is, I don't really actually have any answers for you. I don't have answers, but I do understand that facing reality and understanding it brings success. I can't make you face reality, and I can't make you successful. I can't do it. I can talk to you about the following, however. What you really believe at the core of your being, combined with the goals that you set for yourself, the routines that you have in your daily life, the emotions that you feel, lead to results. That the process of achieving results, good or bad, is the process of what you really believe at the core of your being and the routines, habits, emotions, goals, and other things that are going on in your life. And you can either change what you believe, or you can also change what you do or feel. Remember, if you really believe that trading isn't possible, and you believe that it can't be done, you can actually implement routines, goals, and emotions, and you can actually get results that prove that wrong. You could also truly in your heart believe that trading is successful, that you can be a successful trader, that you can actually make money from the market, and that can lead to a change in your routines and your goals and your process and your emotions and lead to results. But at the core, you can either change what you believe, which is difficult to do, or you can change what you do or what you feel. But you cannot change the market. You cannot make the market cooperate with you. You can't figure out the market. Remember, we talked about it before. You can't figure out the market. It's not figure-outable. Whatever you figure out about the market today that's a sure thing or a probability is just as likely to change tomorrow. And the best that you can ever get with respect to life or with respect to the market is probabilities. That's all you can get. You cannot get sure things. It's impossible. You cannot find a 100% trading methodology. And if you can, well, then you can't move out. You don't have a time machine. And you can't know that it is 100% successful into the future. So the best you can get are probabilities. And the best thing that you can do as a trader is become skilled at engaging in estimation. So what did I do? I created inside of Google Docs a personal watch list. And you can see this at the link that I provided in the email that I sent last night. And I'm going to send you a link inside the Campfire Now chat room. That's Piptoring. That's a different link. It's not the one I wanted to send you. Let's give you this one. There's the spreadsheet. The personal watch list is a method of encouraging you to set your own goals and take responsibility for your own trades. The watch list as we had it will probably return, but the watch list that we used to have was a method of trading that depended on someone else to tell you what might be a good idea. And so you followed somebody else's recommendation for what a good idea might be. What I've instituted here for the next 4 days or 5 days is a personal watch list where you set a weekly goal that is no longer than 200 characters of writing. And then you set a daily plan that you update every day, and it changes every day. And you simply write the result that you achieve, the overall result, inside of Sunday, Monday, Tuesday, Wednesday, Thursday, and Friday. And then you see if you achieve your weekly goal. For today, I don't want to talk about belief systems or emotions or changing who you are at the core. That's so difficult that I'm pretty sure I can't do it. But I can change the way that you structure your day, and routine and process can be enormously important to somebody, not with respect only to trading, but also with respect to the rest of your life. What I want you to do, and this comes from the principles discussed inside of the goal workbook that we all ordered and you don't need to have, and it doesn't even matter what it's called. It comes from this. If you set a goal and then you make daily measured progress in pursuit of that goal, you are going to eventually achieve some better result than if you just randomly threw yourself all over the place. And this week I'm asking you to set a goal for the week and every day come to column C and write a daily plan for what you are going to do that helps you get further to that goal. And then I want you to write the result. I don't care what your belief systems are. I don't care what the problems were with your testing. I don't care that you're having an argument with someone that you care about. I don't care that your job is going poorly, and I don't care about your sleep cycle. I don't care about your health. I don't care about it. Nobody gives a crap about any of that stuff. All I care about is that you have a weekly goal, and I want to know what it is that you plan to do to achieve that weekly goal. If at your core you cannot sustain that discussion and you say, I can't even set a daily goal, I can't set a weekly goal, I don't even know what I'm supposed to be doing. If you don't know what you're supposed to be doing, and you can't set a daily plan that gets you someplace, then you need to stop everything right now and realize that until you can come up with a daily plan and you know what that daily plan is for yourself, you sure as heck don't want to hear it from someone else. It has to come from you. You have to come up with your own watch list. No one else can give you your watch list. It wouldn't matter if I gave you every day a list of trades that you were supposed to take. It wouldn't matter. You have to come up with that list no matter what. It has to be up to you, and that's what I'm asking you to do. It's not surprising to me that so far there have been 5 people, besides myself, that did this. I'm asking you right now and today, what is your weekly goal and what is your daily plan every day that's going to get you to your weekly goal? What is it that you're focusing on today that's going to make a difference? If you don't know the answer to that, you have some testing to do. You have some experimentation to do. If you don't know already what you do best at with respect to the types of trades that we've discussed, if you don't already know what you do well at, you need to take the time to find out what that is. And you need to be responsible for that. If you feel off track and you feel like you don't know what the answer to that is, and you don't know what it is that you're supposed to focus on, then you need to come to the rest of the webinars this week so that you can start to learn to find that out. But I submit to you, I think Dan knows what he ought to be doing. I think Dan knows what he's best at. Dan knows he's best at standard Wallaby divergence across 6 pairs. He knows this already. He already knows this. There isn't a major question about that. Kevin C. knows that he's best at the Kevin C. program of trading the Wallaby with the trend. He knows that already. He's responsible for being accountable to perform based on that methodology that he knows. He already knows that he ought to be doing that. And that's what I'm saying. The core of this isn't some magical change of your instinct or your natural problems or weaknesses or whatever. I'm telling you that you're on the hook, that you are responsible for setting a goal this week, and you're responsible for making a daily plan that gets you there. What are you going to do? What is it that you're going to do that's going to make a difference? Now, I can read every single one of these, and so can everybody else. I'm asking you, expose what your plans are to everybody else, and put yourself on the hook for it. Don't make a plan that you don't think is going to work, and if you don't know that it's going to work, then you're alongside every single other person here. Nobody knows for sure. There is no sure thing in this market, ever. You can make a plan and it can fail, but at least you have a plan. More people posted lower on the spreadsheet, and so we're going to pull these. This is fantastic. We're going to pull these upward and put them inside. So let's see here. I'll delete these rows. I'll delete these rows right here. I hope I didn't delete anybody's rows right there. Did I delete anybody's? No, I didn't. There we go. So now we got a bunch of people making a plan. And there you have it. So it's fantastic. Now we've got a whole bunch. We've got 13 people that have made a plan. And you're responsible for staying on track with your plan and making your own plan for the types of trades that you're going to take. And the rest of the week, we're going to talk about how you can get a better idea of estimating what the result might be once you make your plan. All right, I'm going to stop the recording here, and then we'll talk about some questions that you have.